Hi, Steve Sosnick here with today's Interactive Brokers Midday Market Update for Tuesday, June 16th, 2020. Another day, another rally, it seems. Yesterday was actually a pretty wild one. When I taped the segment yesterday at this time, we were in the process of coming off our lows, working our way back to unchanged. Did not really foresee at that moment that we were going to close over 1% higher, almost 2% higher on a broad range of indices. That was a bit unexpected, but the Fed definitely had a supporting role in both of it. Markets opened lower because the news over the weekend was really not particularly good on the COVID front yesterday, and then the Fed sort of quietly mentioned that they would be basically instructing banks to do their Main Street lending. That, I guess, was a mild positive, enough for the markets to come off their lows, because the markets, again, are very trained to read cues from the Fed. If you don't think the Fed is driving the bus here, understand that it is. And then they meandered higher. Then a little before 2 o'clock, out came the headline that the Fed was going to start its corporate bond buying. Zoom. Again, the Fed doing anything directly indirectly was nice to get the market off its lows. Doing something directly was enough to really shoot the market higher. You might say, okay, they're buying bonds. What does it have to do about equities? But ultimately, if a company can't pay its debts, its equity is worthless. That's called bankruptcy. And so if they're going to support corporate credit, if they're going to make it easier for companies to borrow money, hopefully responsibly, but if companies are able to borrow money, then that's good for the shareholders. Certainly if a company can avoid any trouble. If it keeps money in the corporate bond market, that in theory should help everybody. Bottom line is, if the Fed's putting money somewhere, the equity markets tend to be happy about it. So that was enough to push the markets higher. And we were looking higher going into this morning, and then a couple of things sort of even supercharged the normal overnight rally, because the rest of the world rallied on the back of the Fed news coming out of the U.S. And so then the futures were higher overnight because they saw the overnight markets rally. This is one of these positive feedback cycles. And then we got some even better news. There was some good news on the COVID front in terms of a drug, a steroid that's widely available, being used out of England. That any good news on COVID is typically good for the markets. The retail sales numbers were way above expectations, so that moved the markets higher. And just general enthusiasm kept things going. So we were looking at about a 2 or 3% market rise at one point, over 2%, and then up to about 3%, depending on your index, once we got going. Then Powell it was Chairman Powell's turn to give some testimony in front of Congress. It started about 10 o'clock, and that was more or less where the markets, at least for now, have found their peak. The markets are still broadly higher, but off their highs. As I think the chairman realizes his role in all this. And I think he does his best to temper expectations. I think people got a little freaked out last week during the press conference when he was really doing his best to tamp down expectations. And even now, his comments are very measured. It's in the sense of, okay, the Fed is going. I think the message he's trying to get out is the Fed will do what it needs to keep the system liquid, to keep the economy afloat. Remember, its mandate is not the stock market. Its mandate is economic stability, full employment, stable inflation. You didn't hear me say the words "keep stock market humming" in that list. And I think I gotta believe from the way he's doing this, he's not particularly comfortable with the idea of the fact that he's doing all these steps to meet his mandates, but the effect is to create euphoria in the stock market. And I think his comments, while not throwing cold water on any part of the economy, definitely try to temper the enthusiasm. Going back to the retail sales numbers, they came out plus 17 and change. That's a really good number. No one was looking for anything close to that. I do have to wonder how much noise is in these numbers yet again. I haven't found anything sort of as glaring as there was in the jobs number of about a week and a half ago. But remember, you're coming off very low bases, and even what looks like what can be a staggeringly eye-popping number, and there's no way to say anything other than it beat expectations and beat them big. As we come out of the shutdown, we're going to see a lot of this back and forth where certain numbers are going to look great, but then when you step back and look in perspective, we're not back to where we were at the height of things. Are we moving in the right direction? Yeah, probably. Depends what state you're in, I suppose, because certainly some states seem to be putting the worst of the virus behind it. Some states seem to be reckoning with it yet again. So there's a lot to unpack. These are the things we're going to have to think about. I hate to say just watch the Fed, but really that's the place to take your cues. The Fed drove the market higher yesterday rather. I'm not going to say it took anything away from the market today, because really all it did was sort of knock off some of the enthusiasm that we saw early in the markets. But you got to keep your eye on them. I did tweet out yesterday that the balance sheet, the Fed balance sheet, was essentially unchanged week over week. And we'll have to see if that happens. And the chairman was kind of quick to say today that while they talked about buying corporate bond ETFs, now they're actually going to buy individual corporate bonds, not the ETFs, which is a little less indiscriminate. I do have to wonder if he's kind of trying to put a lid on the Fed balance sheet growth at this point, trying to keep something in reserve. And the other thing to keep in mind is the better these numbers are, the less case that somebody's going to make for fiscal stimulus. I did forget to mention that there was yet another discussion from the president about infrastructure spending, but I've been hearing that for too many years to put too much stock in it right now. But these are all the situations at play. I think on one hand the Fed giveth, on the other hand the Fed or the market taketh away sometimes, and we'll see how this all plays out. Happy trading, everybody.